Software stocks hitting a snag amid demand concerns as inflation and recession fears linger. But what does this mean for investors who are looking at this industry? That's where we find today's take from Mr. Sozzi.
I can tell you what it means for me. It's a lot of busy weeks because you have a lot of investor conferences coming up. Deutsche Bank, I believe, just had a software conference. Jefferies had a conference. We have the Goldman Tech conference next week. And this comes all against the backdrop of software stocks that have been under severe pressure. They've been hammered. And you look at the main software ETF, that is the iShares Expanded Tech Software ETF, has really cratered since the early part of August. It has really underperformed the broader market, which, of course, hasn't done too well on its own. But still, software stocks, again, selling off here. They had rallied back a bit, but again, that sell-off has resumed. And some of the worst performers in this group are Adobe, Salesforce, Intuit, and ServiceNow. Adobe, I believe, reports earnings later this week. I think the street is concerned what that guidance might look like, especially after what Okta reported last week, concerns about the pace of enterprise spending. The guidance not too good. Salesforce has been under pressure. Intuit, I'm surprised to see it on this list because they actually had a pretty good quarter a couple weeks ago, and then ServiceNow also a pretty good quarter, but did voice some concern several weeks ago when they reported about the pace of enterprise spending moving forward. So I'm looking at some notes here from Jefferies analyst Brent Thill, who did a deep dive into software stocks after their conference and trying to call up what might lead to a rebound in some of these stocks. But he also is first calling out that this pain, this sell-off couldn't continue. The storm is coming and will be more fierce than we all think. The industry is seeing that things have changed, mostly on the macroeconomic front. That is what Phil thinks is causing this sell-off. But a couple things here, what might lead to a bounce in some of these stocks. Again, first, we have conference season picking up on Wall Street. A lot of these companies are going to be presenting in the weeks and months ahead. Valuations have come down a lot. In some cases, a lot of these names are trading well below peak valuations. Expectations have come down a lot. Long-term investors have to reemerge in the space for these stocks to catch a bid, according to Phil. Also, the return of M&A. I think a lot of these valuations have come down so much, you might see some consolidation. Does Salesforce get hungry to make its next big acquisition after it has devoured Slack from a couple years ago? And then last but not least, good point by Phil here, you want to see the unwinding of the recession trades. So a lot of people have piled into these recession safe haven trades. That has to unwind a little bit, and perhaps that cash goes into beat-up software stocks. But ultimately, my take is this. Just wait for this trade to come with you. There's really no point right now in trying to be a hero, or as they would say, to catch a falling knife. Wait for this trade to come to you. Wait for these stocks to act better.
And you with a pile of cash.
Me with a pile of cash, because I waited for the trade.
Oh, so yes, you were rewarded handsomely. All right.